What's up, YouTube? So in today's video, it's a very important video. I'm going to be talking about delta and how I use it on a daily basis in order to find my main strategy plays, which is pretty much just trapping buyers. In an uptrending market, it would be trapping sellers. Because we're in a downtrending market, we're going to be trapping buyers. And to preference these clips, some of them will be live talking, some of them will be talking after, like I am right now. And the screen on the right that you see without the footprint, that changes later on the clip. I was testing out whether I want a range chart on my right to correspond with the footprint or a time chart, and I ultimately decided like time charts better. But this is from Friday, and then all these clips are from Friday, Monday, and Tuesday, 3-day full of sessions. And I think the total profits were around $7,000 or $8,000. Now, in the first play, you can see that we had 776 and 753 positive delta show up. Now, I waited for negative delta to come into the markets, and once I saw the negative delta come into the markets with the value area gap down and the EMA slope turning red, I entered on the candle close, which you can see that's right around where my entry is, and I take it for 8 points with a stop loss of 4 points. I think also in this clip, we were around an EMA. I really looking out for these, especially when we're in an uptrending market for the 65 or 200 EMA or even a pivot point. I can't even remember because I don't have that screen pulled up on the right. Later on the clips, you'll see that I do, so it's easier to follow. But I'm going to go ahead and speed this up and let it play out. So in this next clip, you can see the huge negative delta, negative 2,700, coming in right after about 2,200 total delta, wiping out all of the positive delta plus some, right? And you can see I entered a bit early. I didn't wait for the 2 candle confirmation, right? I entered after 1 candle confirmation. I rarely ever do this. And the only reason I did it during this play was because we had negative 2,700 delta, which is like super uncommon. You don't even see that every single day. That maybe happens 3 times a week, if that. I don't really see it often, so I kind of went in a bit early, and you'll see I add to my position as I get that second candle confirmation. So I'm going to go ahead and let this clip play out. So you can see right there, both my profit targets got hit. I moved my runner stop loss up. This play didn't end up working out. The runner didn't end up working out. I ended up getting stopped out of it. I only held a runner because we saw the negative 2,700 delta, and I thought we were going to get a whole entire downturn shift, but that didn't end up happening. I think the market ended up just continuing upwards after this, but we still got the points. Now in this next play, you can see the amount of positive delta that came in on 3 different candles, 1,700 and 900. And then directly after that, we had negative 571 negative delta with the value area gap down with the negative 800 delta after that. And I ended up coming back to this play a bit late. You can see it was lunchtime. I went to go grab lunch and I came back to my screen and this opportunity presented itself. So I took it on the 3rd candle rather than the 2nd candle. But I'm going to go ahead and let it play out and you'll see what happened. So this was just a few minutes after that previous clip. You can see I ended up taking my profits a bit early. I got nervous because I'm not used to sizing heavier than two contracts yet. I've been sizing two contracts for like a whole entire month now, and I decided that I want to start going into four or six contracts because I remember hearing a very influential person. He's big on psychology. I forget his name, but he said if you're not uncomfortable in your position sizing, then you're doing it wrong. Or if you're not uncomfortable in your trade, and obviously there's a medium to that. You don't want to be too uncomfortable, but you also don't want to be too comfortable, right? You want to be consistently getting better every single day. In order to do that, you have to put yourself in uncomfortable positions, which is why I've been trying to size heavier with four to six contracts. And I hate taking profits early, but when I'm sizing heavier, I get a bit nervous, so sometimes I do take profits a bit early. But another play opportunity presented itself right here. You can see on that single candle we had 1200 positive delta, with the following candle having negative 200 and then negative 600 delta. Um, I did end up entering, even though we still had another candle with positive 900 delta, just because we were such in a strong downtrend that I had a feeling we were gonna go lower. And the play opportunity presented itself. We didn't have much of value area gap down, but the negative delta came in directly after the positive, so I wanted to take it. I would say out of 5 stars, it's probably 3 stars, with the previous play being around 5, just because there wasn't a huge amount of negative delta, and the EMA slope has been red this whole entire time. We weren't shifting from a blue EMA to a red EMA, but yeah, like I said, around 3 out of 5 stars, but still a good play. So I'm not going to tell you guys why I entered this play. This was the first play I took Tuesday morning. I missed the first setup, which presented itself at open. I wasn't paying attention. You could see the accumulation and all the positive delta that was coming in, but price wasn't moving up. And then the negative 1000 delta, which would have been the entry, but I didn't take that one. This was the first setup I took. See if you can figure out why I took it and test yourself. And see here is we have a prominent POC, meaning the POCs come at the same level back-to-back candles. Now, when this shows up, we usually get some type of reversal, whether that's the upside or downside. Now, what I like to see is a gap down in the value area to either side, along with the corresponding delta. Now, there wasn't a huge amount of negative delta right here, so I'm not sure if I'm going to take this play. It kind of just depends on the value area and the amount of delta that enters in on this candle. But let's see, and let's let it play out. We'll see what we want to do. But obviously I'm eyeing a short. I would never go into a long, even if the value area gapped up, just because we'd be fighting direction so hard. And this looks like it can be a very solid short. Yep, I'm going into a short. Let's add to our position. Now, once again, the reason for this play is the prominent POCs, which is part of the new update that the developer added in. I personally like it a lot. I haven't seen a lot of people talk about it, but it's one of my new favorite features. I love looking out for it, and I've noticed a lot of reversals happen whenever they show up. And the confirmation of taking this play was the negative delta in this candle, right? Negative 660, following all this positive delta, trapping these buyers. And you can see these buyers now starting to cover their longs because of the negative 1500 delta, which pushed price even further down. Right? It's the same concept every single time. These buyers trying to push markets up, but market just accumulates. They don't get any ticks out of it. And then sellers come in and wipe out all the negative delta, which makes the buyers cover their long. And remember, when buyers, stick inside your head, when buyers cover their longs, it brings more negative delta into the markets and it push prices further down. It's a very, very simple concept. It's super easy to look out for. So here's my P&L results from the last 3 days, Friday, Monday, and Tuesday. About $8,000 total from 3 different sessions. Now you can see that I did experience some drawdown right here, and it's because I'm not a robot. I am human, so I'm not perfect, and I wasn't following my trade strategy. I was entering trades early, just being dumb whilst trading pretty much. But when I actually follow this strategy, you can see what happens to my P&L. And it's not a difficult strategy. It just takes some time of backtesting and understanding the parameters around it. But I suggest you guys, if you have footprints, I suggest you try it out. If you don't have footprints, I suggest you learn it because it's super helpful. It's super easy, and it's not as intimidating as it looks. But if you enjoyed the video and if you learned something, please be sure to like and subscribe. And hopefully I can teach you guys how to use footprints.